Hey, thanks everyone for joining us today. Today we're talking about Apple's earnings. They reported, of course, last night. Apple's been in the news a lot, so we thought it would be good to dive in and say what is actually going on with the smartphone maker. Well, I think it's appropriate that we first address what the expectations were going into the quarter. They were asymmetrically negative. So what does that mean? Well, if you're coming into a quarterly result and everyone or a large majority of the population and the investor population think that the quarter is going to underperform expectations, and especially next quarter is going to underperform, then that sets up a pretty attractive entry point. So for example, it's like if you're in the Olympics and you're jumping over a high jump and the high jump is set at 8 feet. And then you actually lower it for this next person because this next person has a special, has organized with the International Olympic Committee beforehand to have it only set at 5 feet. Then it might be easier even for that person who may not be as talented to jump over that 5-foot bar. And that's kind of what we had in Apple today. So over the course of the quarter, the stock fell precipitously as China slowed. And then Apple in early January came out with a revised outlook, and Apple rarely, if ever, revises its outlook. So just that alone was hugely significant. And they said instead of doing about $90 billion in sales this quarter, which is a phenomenal number, instead of doing $90 billion, they're going to do $84 billion. And instead of doing about $2.92 in earnings per share, they were going to do about $2.16 in earnings per share. And lo and behold, that's what they did. They did a little over $84.3 billion in sales, and they ended up doing $2.18 in earnings per share. Okay, so that was all well and good. That was kind of as expected. The next quarter is where it really gets interesting. So that analysts expected that the company would come in with about $59 billion in sales as their outlook for the March quarter. When in actuality, Apple came out and reported that they would do $55 to $59 billion in sales. EPS, earnings per share, follows a similar trajectory. Instead of about $2.60, the interpolated range is more like $2.17 to $2.50. Now, you would say, okay, well, that's pretty negative. Apple's coming in with negative revised guidance. But the fact of the matter is that even though that was the stated expectation from Wall Street ahead of time, there was a lot more fear in the market than those expectations suggested. So when Apple came and said, you know, if we hit the high end of the range, we'll actually do what Wall Street expected, that gives investors a little bit more confidence. So that's number one. That's kind of setting the stage for what happened in the quarter. So what did happen in the quarter? Well, it was really about upgrade rates slowing, really globally, and then especially in China. China was incredibly weak. What had been producing double-digit revenue growth is now down. It was down 27% in the December quarter. 27% in China. China's supposed to be growing. It's supposed to be a growing economy. Did not grow in the fourth quarter. And my view is that it's not expected to grow much at all in the first quarter either. What Apple also did is they stopped reporting iPhone sales. Now, they said they were going to do this last quarter, but they stopped reporting iPhone unit shipments on an isolated basis. They still produce revenue and for products and revenue for services. And what they tried to do in the conference call was really shift the direction of the conversation to services and away from products, saying, we now have this massive installed base of 1.4 billion units, and we are going to push them services, and services having good growth. It should double by Apple's expectations, a little bit more than double even from between 2016 and 2020. And that really is the future of the company. The problem with that is that services still only amount to 15% of the company's entire revenue base. Moreover, some of those services are actually attached to iPhone. So some of the accounting metrics that they use attach things like Apple Maps, things like Siri, those type of services to the product itself. So they strip that out of the iPhone dollar dollar value and push that to the services. So services may actually look a little bit inflated. It's more than just Apple Music. It's some of these other services, ancillary services as well. So that's interesting. But Apple stock really performed very well after that. Why did it perform so well? Well, people are buying what management has to say about the services, and the second reason is that expectations were just extremely, extremely low. And when expectations are low, that means that not very many people own it. And when Apple stock starts to go up 1%, then 2%, then 3%, all of a sudden these fund managers who don't own it go into their investment committee and start talking about it. And then they say, look, why don't we at least have a market weight position in Apple stock? And so they come back from investment committee and start buying the stock up again. So in my opinion, those are what are kind of driving the stocks right now. Very low expectations, shift toward the services, and potentially a hope for the future of 5G out into 2020. But that wasn't really directly related to either the earnings report or the conference call. So expectations are extremely important when gauging a lot of these earnings reports. We'll try to keep you appraised of what's going on, especially on big ones like this. In the meantime, good luck with investing, and hit us up if you have any questions. Thank you.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.